Bitcoin just tested a critical bottom at 82K, the exact level it bounced from late January. Everyone's screaming, buy the dip, it's a double bottom. But here's what they're missing. We also just got violently rejected from AVWAP. Price rallied from 87 to 96 and kissed AVWAP around it and got absolutely crushed back down. And that AVWAP rejection, that's the trade I didn't take, even though it looked perfect on the surface. Today I'm gonna show you why that rejection told me everything I needed to know about Bitcoin's structural weakness and why this double bottom might be a trap, not an opportunity. This is the institutional volume terminal, and let's break it down. All right, before we go into the weeds, let me show you the daily time frame so you understand the context we are trading in. Look at this structure. Bitcoin rallied a couple of times. The first time in late November from 80 up against AVWAP, was rejected. Again, it had a bit of a relief rally again and tried to get through the AVWAP and was rejected on the 18th of January with some more volume. And this is a distribution phase, multiple rejection signals all the way from the top and also here in this area, and price couldn't hold above the AVWAP. So it started making lower highs. Yeah, and much more critically on the 4 hour is that it is the anchored VWAP. It started to flatten out here, and the price, they kind of fought over this territory, and we see absorptions, positive and negative absorption, but always we see a lot of liquidity sweeps here. And this was the last time where we tried to rally and to regain the AVWAP at the same place where the golden pocket also was. And as I said in my previous video, I am not gonna buy into this because this was also the FOMC announcement, so anything could happen, and it's better to wait and see what the price will do. And in this case, it was rejected, and now we are seeing this bleeding distribution from institutions. Let's talk about the double bottom. We touched approximately 42, well, we were all the way down to 81.2, and which is around the same time as we were at January 25. And this is a textbook double bottom pattern, right? There's just one problem. A double bottom is only bullish if it's accompanied by the right volume structure. And right now, it is not. Look at the volume profile here. There is almost no volume here. At least there's not significant institutional position here. The real high volume node where institutions have their cost base is further down on the 4 hour. And you can see it even more clearly on the daily, that there's not really a lot of volume. We have more volume here at the 76 area, which also is another bottom that we see on April. So I'm not really positive about this double bottom, and I would personally not take this trade. On the daytime, look at this. We have 85 zone where there is some volume building, and all the way down to 76, 77 before we're starting to pick up a little volume. Yeah, so yes, we might bounce from 82K again. We might even see a decent rally back into the 87 to 90K area, but that doesn't make it a high probability long entry, because here what's happening. Retail sees the double bottom and thinks support confirmed, time to buy. But institutions, they know the structure is bearish. They'll see any bounce as another distribution opportunity. The AVWAP rejection already told us that story. This double bottom doesn't change the narrative. it just gives institutions another cycle to distribute. So let me be crystal clear about the regime we're in, because this is a foundation of everything. Look at the 4-hour chart up here in the corner. The structure is bearish. The distance to POC is 6%. The distance to VWAP is almost 9%. So price is below AVWAP. This is a bearish regime, full stop. Okay? On the daily it's even more pronounced. The VWAP is, we are 13.5% above AVWAP, and the structure is bearish. We have a swing delta that's positive. I will come back to that. And we kind of pierced our way through value area, and right now we are sitting in the bottom of the value area. And look at the trajectory of the AVWAP. It's not even flat. It's not rising. It's actively declining. Yeah, so see that downward slope? This means the institutions are continuously distributing. The average institutional cost base is getting lower, not higher. They are selling, and the price at which they hold Bitcoin is declining. So this is why AVWAP rejection matters so much. That was the test. Are institutions ready to accumulate again? And the answer was a resounding no. They used the test as an opportunity to distribute more. Until we see AVWAP reclaimed and held, while price trading above it for multiple sessions with positive delta confirmation, with the AVWAP slab flattening and starting to rise, we are in a bearish regime. And in bearish regimes, the playbook is simple. Sell rallies, don't buy dips. Any strength towards AVWAP is a gift to exit longs or position short. Weakness away from AVWAP is not a buying opportunity. It's a confirmation that the distribution is just continuing. So we tested the AVWAP around 95, 96. We got rejected, and now we are down at 82K, 13% below AVWAP. That's not oversold and ready to bounce. That's distribution continuing and price seeking real institutional support. Now, I know some of you are looking at this positive swing delta and thinking, well, positive delta means buying pressure. That's bullish, right? So let me explain what's actually happening here, because this is where retails can get trapped. Positive swing delta means that more volume is transacting at upticks than downticks. Net buying pressure, all right? So that's technically true. But the question is, who is buying and who is selling? Yeah, so look at the price action. We are making lower highs, we're making lower lows, and we broke through, we got it rejected at AVWAP, and we even, with high volume, broke through the point of control. And if institutions were accumulating here, we wouldn't be making lower lows, right? No, we'd see prices stabilizing, building a base, and forming higher lows. So what's actually happening here? Retail traders and weak hands, they are buying the dip at 85, 82, thinking they're getting a discount. Meanwhile, institutions are systematically distributing into the retail bid. The positive delta that I talked about in a bearish regime is typically a trap, not a reversal signal. It tells you that weak hands are accumulating for strong hands, and the distribution process can continue weeks until the bid exhausts. All right, so if 82K isn't a high conviction support despite the double bottom, where is the real support then? Let me show you what the volume profile reveals. So if you look at this dark area here around 76, 77, see how thick that is if you compare to this area, just underneath where we are now. This area means that there is more volume transacted back in November. So that's where institutions accumulated. That's their cost basis. That's where they'll defend. So if we break this 82, and I think there is a decent probability we do because of this thin volume we have. The next real support will be here in 77 to 80, where we also had a bottom back in April. And that's where I am watching for capitulation signals, like volume spikes to 2 to 3 times normal, long wick rejections like we have here. Here is a long wick rejection, and price testing lower but closes higher. And the CVD divergence, price are making new lows, but cumulative delta refusing to go lower. And also multiple absorption signals from my terminal, and we see like these absorptions signals that there are here back in history. But when you hit this blue zone down here and we have another double bottom, I think that's a stronger setup than we have right now. So here is my framework. If Bitcoin holds the 82 that we are in now and starts building volume with absorption signals, maybe this double bottom has legs. But I'm skeptical because we just got rejected from AVWAP so violently. Yeah, so more likely we will test the bottom from yesterday again. It fails because there's not enough institutional interest, and we get a quick move down to 77 to 80K where the real support lives. And that's where I'll be looking for long entries. Not here, not at 82K, but at major institutional support with clear volume signatures. Now, the other scenario where Bitcoin comes tradable for longs is obvious if we reclaim the AVWAP again. On the 4-hour, AVWAP is currently around 90,000 and declining slowly. For the regime to flip bullish, we need to reclaim 90K with volume, hold above it 2 to 3 sessions, not just spike through it, show positive delta confirmation, and an AVWAP slope needs to flatten and start rising. On the daily, AVWAP is even higher, around 95K. For a confirmed daily regime change, we need to reclaim 95K with all the same criteria. But here's the thing, we just tested AVWAP and we got violently rejected. This tells me that institutions that aren't ready to flip bullish yet. So yes, if we rally back to 90 to 95K and this time we see sustained trading above AVWAP with volume, then I'll flip, then I'll get long, then the regime has changed. But right now, we tested it, we got rejected, and we're 8 to 13% below depending on the time frame. That's confirmation of continued distributions, not a setup or reversal. The market will tell us when it's ready to flip. We don't have to predict it. We just have to watch the structure. So when the AVWAP gets reclaimed with conviction, it'll be obvious. The terminal will show it. The volume will show it. The price action will show it. Until then, we trade the regime we have, bearish, which means no longs at double bottoms. No longs at oversold bounces. Only shorts on rallies towards resistance or waiting for capitulation at major support. So let's just talk about risk management for a second, because this is where most traders blow up. They see a double bottom. They remember from the technical analysis course that double bottoms are bullish reversal patterns. So they buy and they get stopped out. Then they buy again at the next support and get stopped out again. And here is what they are missing. Patterns only work in the right context. A double bottom in bullish regime at major support with volume confirmation, great trade. A double bottom in a bearish regime below declining AVWAP with thin volume, that's a trap. Regime rules override pattern recognition. I don't care how pretty the double bottom looks. If we are in a bearish regime, I am not buying, period. Risk reward needs to account the structural levels, not arbitrary percentages. Let's say if we go back to the 4-hour, if you buy here, where is my stop? Is it 80, 81? Is it 80? Is it 77? If my stop is at 81, that's barely 1% away. any volatility stops me out. If my stop is at 77K, that's like 6% risk. For what reward? Rally to 87, that's 6% risk for 6% reward. 1-to-1 risk reward in a bearish regime, that's, terrible odds. So compare that to waiting for the 77 area down here and the or 80 or the 77 area. You get in at 77, you have a stop at 75, below the major support, you have like a risk of 3.8%. And then you have the target up here at the AVWAP. That's 15% reward. So the risk reward is 1-to-4 in our favor. So that's why I don't force trades. That's why I don't buy the AVWAP rejection at 95, even though it looks like a breakout. And that's why I'm not buying this double bottom at 82, even though it looks like support. The structure has to be there. The volume has to be confirmed. The regime has to support the direction. Otherwise, you're gambling, you are not trading. You're hoping, and hope is not a plan, okay? All right, so what am I actually watching right now? What changed my mind? If 82K holds here with volume, and I mean real volume, absorption signals, long wicks, CVD divergence, then maybe institutions are defending this level. So I want to see multiple tests at the 82 without breaking. So I need to see volume is building in this level. So a high volume node is forming. The swing delta staying positive through the test. And price starting to make higher lows, 82, 84, 85, and so on. If that happens, then maybe we rally back to 87 and 90K. But I'm still not buying until we reclaim the AVWAP, because any rally in bearish regime faces systematic resistance, okay? So more likely, in my view, 82K fails, we get another test, volume isn't there to defend it, and we drop quickly down to 70, 80, to the 77 to the 80 area. And that level I'm watching intensely for capitulation volumes, long rejection wicks, terminal absorption signals, and CVD showing institutions stepping in. So entry at 78, stop at 75, target back at AVWAP 90. That's the trade I can take with conviction. The third scenario here, if somehow we rally from here and reclaim 90K or 95K on the daily, with conviction, the regime automatically flips bullish. Then I'm looking for longs on dips back to the AVWAP. So we need to reclaim it, and then I am looking to buy the dips. But given we just rejected the AVWAP a few days ago, I'm skeptical this happens without first testing a lower support. The market will tell me which scenario plays out. I don't have to predict it. I just have to be ready to react when the structure confirms. Yeah, I know there's a voice in your head right now saying, what if this is the bottom? What if you miss it? And I feel it too. I've felt that voice too. Every trader has. It's called FOMO. But here's what I've learned. Missing the bottom is better than catching a falling knife. I mean, if Bitcoin rips from 82 to 100 and I miss it, I've lost nothing. I still have my capital, and I can enter at the AVWAP reclaim on the 90 to 95K and still catch most of the move. But if I buy here at 82K and it drops to 77, I'm down 6% already, and I'm emotionally compromised. Do I hold? Do I add? Do I stop out? I'm no longer trading, I'm just hoping, okay? So capital preservation is more important than participating in every move. The best trades, they announce themselves with clear structure. You don't have to predict them. The AVWAP rejection announces itself with clear distribution signals. The next major setup, whether it's capitulation at 77K or at the AVWAP reclaim in 90K, It will announce itself. So just be patient, wait for structure, follow the regime. Okay, so clear action plan. Do not buy this double bottom at 82K without volume confirmation. Do not fight bearish regime. Do not use oversold as a reason to enter, and do not trust pattern recognition over structural analysis. What you should do is watch 82K for genuine absorption, volume spike, and in my terminal, I have signals for that. Prepare the potential move to 77 to 80K major support level. Wait for AVWAP reclaim at 90K and wait for the regime flip. Keep capital preserved for high probability setups. So if you must trade, wait for the 77 to 80K with capitulation signals. That's the best reward. Or wait to the 90K plus AVWAP reclaim. That's the regime confirmation. And I would say position size 25 to 50% of normal due to all the volatility. Use volume-based stops, not arbitrary levels, okay? All right, look, I get it. Double bottoms, they are exciting. They look clean. They make you feel you found the entry. I've done this so many times, but I've been trading for more than 25 years. And trading isn't about finding the perfect patterns. It's about understanding the regime, following institutional flow, and taking trades where the structural supports your thesis. So right now, the structure says bearish regime, declining AVWAP, violent rejection from the resistance, thin volume at current support. That is not a buying environment. That is a waiting environment. The market would always give you another opportunity. Be ready when it does. If you want the daily analysis where I break down these setups in real time across crypto, indices, FX, and commodities, the link to my Substack is in the description. The institutional terminal indicator that powers all this analysis is available on TradingView, and the link is also in the description. So drop a comment. Are you buying this double bottom or waiting for better structure? I want to hear your thesis. Hit the subscribe if this was valuable to you, and I'll see you next week. Have a good weekend and trade safe.